Asian markets, they have started off on a positive note. This as China's economic activity unexpectedly bounced in the month of March. The official PMI rose to around 50.5 in the month of March from February's three-year low of around 49.2. That's marked its first expansion in the past 4 months. Now, in terms of the US-China trade front, well, a high-level trade negotiation between the two economic powerhouses, that in fact is set to resume in Washington this week, following last week's talks in Beijing. Now, the Nikkei, that's having, an additional stronger run, actually. That's on the back of another factor. We have the dollar yen out there. Remember, just last week, it had breached even the 110-odd mark. Now, they're showing some weakness, which is good news for an export-oriented economy. And on the back of that, the Nikkei is up nearly around 2%. But not just the Nikkei. As I said, the rest of Asia as well is doing well. The KOSPI is higher. And even the Straits and the Taiwanese index, both the first two ticks were well in the green. And that would mean that the SGX Nifty is suggesting an opening closer towards those all-time highs. A 50-point bump up is what we could brace ourselves for.
All right, so that was all of the action from the Asian markets, but let's take a look at how Wall Street fared. U.S. market stocks rose on Friday amid renewed optimism on the progress of trade talks between Washington and Beijing. The Dow Jones closed over 200 points higher, while the Nasdaq Composite climbed around 0.8%. The S&P 500 also rose around 0.5%, notching its best start of the year since 1998. CNBC's Josh Lipton now gets us a wrap of all of the action on Wall Street. Josh.
It's the last day of trading for the quarter, and U.S. stocks just posted their best start to the year since 1998. The Dow ending the day up 211 points, the S&P higher by 18, and the Nasdaq tacking on 60. Americans are spending less than expected, indicating the economy has slowed in 2019. Commerce Department reporting that consumer spending, which makes up more than 2/3 of economic activity in the U.S., rose only 0.1% in January. U.S. Treasury Secretary Steven Mnuchin says that U.S.-China trade talks were constructive. Mnuchin and Trade Representative Lighthizer were in the Chinese capital for the first face-to-face meetings between the two sides since missing that mid-March goal for a summit between President Donald Trump and Chinese President Xi. And shares of Lyft popping nearly 9% in its trading debut, the ride-hailing service beating its rival Uber to the public market, and investors liked what they saw. Friday's IPO lifts the tech company's valuation to $25 billion. That's the action from the U.S. market. Now back to you in Mumbai.
All right, thanks a lot for that, Josh. But let's now also hear out some opinion on the road ahead for the U.S. market.
We seem to be stuck in this sort of quagmire of weak growth and low inflation, and clearly the bond market is telling us at least that the risks of recession are intensifying. Against that backdrop, it seems very hard for central banks to move towards normalizing policy, and so we're in a bit of a rut as far as central banks are concerned. I find it very difficult to see what else they're going to be able to do. They've used so many different policy tools. What's new in that policy toolkit to be able to warrant any sort of further stimulus-type measures?
The U.S. economy has slowed down, but the problem over here is that the rest of the world has actually slowed down even more, and that's what's probably caused the dollar to not weaken and, in general, still continue to actually strengthen versus the rest of the world. The recession signals yet flagged by the yield curve should be considered as somewhat material yet. We actually think that the trend in general, the payrolls data, is still holding up pretty well. So for now, I would still fade all the recession risks in U.S. that the yield curve is still flagging.
Well, in European markets, they ended higher, though off the session's high on Friday. This after British Prime Minister Theresa May lost another crucial Brexit vote in the United Kingdom Parliament. Now, in terms of data, German retail sales rose more than expected in the month of February, while the UK economy, in fact, grew by around 1.4% in 2018. That's the weakest expansion, in fact, we've seen since 2012.
All right, let's also look at the latest in the Brexit deal. UK Prime Minister Theresa May faces another major setback as the MPs reject her deal for the third time. The vote was defeated by 58 on Friday, the day that the UK was originally meant to leave the European Union. The new Brexit deadline is now April 12th rather than May 22nd if May's deal had passed. Now, with just 2 weeks left for the April 12th deadline, UK PM Theresa May is under mounting pressure to deliver a Brexit deal or a no deal. While European Commission President has said that the bloc has been very patient with the Britain exit, it has never The UK Parliament will now vote on all of the options today.
Okay, turning our attention to the currency space then, the dollar index holds steady against a major basket of currencies on weak US economic data, while the Japanese yen has slipped in comparison to the US currency, as we said earlier. That's moved to above that 111 odd mark.
All right, let's take a look at all of the world of commodities now. Crude oil extended gains as US sanctions against Iran and Venezuela, as well as OPEC-led supply cuts, overshadowed concerns over a slowing global economy.
All right, on that note, we'll slip into a short break. You come back, we'll tell you all the cues and news that are stacked up for us when we open up for trade. Don't go anywhere.